Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 13th, 2009. Well, we're seeing a slight pullback on Wall Street. It was much more dramatic this morning with a nice sell-off in the financials, but almost immediately, folks, we saw the financials catch a bid, and I'm going to go over the charts here on an intraday basis. I also want to go over some financial stocks. I also want to focus on the 60-minute and the 10-minute spiders, the SPY, to give us a full sense of where this market is headed for the rest of the day. Now, last Thursday, again, Friday was the holiday. Last Thursday was just a momentous day, folks. We saw some squeezes on some financial stocks, the likes of which we really haven't seen in a long, long time, all led by Wells Fargo. Now, that's another story right there. I'm not going to get into that too much about how I don't necessarily believe or don't necessarily trust the fact that it's as simple as just doubling earnings expectations here. We have to see their books. We need to see exactly what's going on there because I find it hard to believe without seeing how many defaults there were and so forth, whether or not it's just as really as sugar-filled or sugar-covered as the market seemed to believe on Friday. But nonetheless, the market still result in a continued move up in the financials today, folks. We're seeing Goldman up almost $5. We're seeing Morgan Stanley up 65 cents. Bank of America up $1.20. JP Morgan up 50 cents. So the financials have regained a strength. Now this morning, initially you saw a gap down on all of them, and it was actually a pretty nice move down initially, but they just caught a bit instantaneously. I'm going to show you Goldman Sachs' chart. Here's Goldman. So you gapped lower here. This is where you gapped on Goldman Sachs. And look at that. As soon as you gapped, you touched slightly lower and then started to race higher. Beautiful move up right to the even number. Now, that's an even number play we go over in the chat room. It's a great trade. And look at the fall on that. Even number play dictates a shorting in this situation, although it can be different with each situation. And a beautiful pullback on Goldman, about $2 to $3 pullback there. And then a nice move up here off the 20. Notice the 20 moving average on Goldman Sachs intraday being the perfect buying opportunity there. First hit of the 20. Those chat subscribers obviously know that one as well. Now, folks, just to go over a couple other things, Goldman Sachs has earnings tomorrow morning. That's going to be insanely important to watch. In addition, you have PPI tomorrow. You have some retail sales numbers. You got housing data coming out this week. Intel earnings tomorrow after the close. So there's a lot of things going on here we need to pay close attention to. But one thing you can say today is financials continue to help this market stay away from major losses. And right now, the S&P has just gone positive, up 0.02 points. The Dow is down 37 and the NASDAQ down 7. All right, now let's go back to the spiders and talk a little business here. Let's see what we can talk about on the levels. Now, you guys know we focus on the trend line analysis, price, pattern, and time. That's how we've made a name for ourselves. That's how we continue to call levels so accurately. And what I will tell you right now, notice right here, see how the market's starting to rally up into this green trend line I've drawn in, which is a major trend line from this morning, from last Thursday as well, all the way up. And you can see the pink trend line right above here, which is at the highs of the day. This is going to be good resistance. It's gap fill. So this should be very, very solid resistance, at least initially on the way up. And you can see the market starting to back off this level. But anywhere between this level, 85.70 to 85.90, should be very significant resistance on this market, on the spiders, the SPY. And again, why? Because you have a trend line here, green trend line. Right above it, you have a pink trend line at 85.80. And then that mirrors the high from Thursday, excuse me. And then after that, you also have gap fill. So there's a bunch of situational things right here that are pointing to a lot of resistance. Now, going over what the market did initially is you saw the gap lower. And again, here's where we closed on Thursday. Here's where we gapped lower today on Monday. And you've seen a nice pullback, a 3-bar pullback. But notice what you came into, folks. You came right into this green trend line and this pink line right here. That's major support. Notice also it's right above the 50 moving average here in orange. So when you have a triple cross right there, you know that's going to be very, very major support on the market. Sure enough, it was, and off to the races this market went. All right, so you had a nice little tail, not a bottoming tail by any stretch, but a little bit of a tail right into those key trend lines, and then you started to rally off of it, and you rallied all the way up until you crossed this pink line, and the tail actually hit the secondary green line. All right, so you had green line 1, green line 2. The second green line was tagged, and notice how you had a strong pullback, and in fact, here's a good topping tail. So you had a little intraday topping tail signal, and what I always tell my traders to do is you want to keep an eye on that because as long as it doesn't take out the high of that pattern, you can look for more downside in this pullback. And sure enough, look at this. So a nice little tail here closing in the lower portions of that candle, and look, 1, 2, 3, 4 pullbacks. Where does it go? The lower green trend line. Notice how this green trend line holds it down here. What happens right here? Holds it again. Get a nice bounce up, little micro pullback. Now remember the change in direction. All right, see how this is a big a big red candle, but look at how one green candle, two green candles actually take out the high. See that high gets taken out in this green candle? So that means it negates any in spirit of bear flag position. And again, this is all stuff we teach in the Research Center, folks. All stuff we teach on our website, inthemoneystocks.com. Guide and educate. That's our goal out there, is to make sure all of our subscribers, our premium subscribers, understand and can do it for themselves. That's really the key here. But notice again how you were looking for initially a bear flag pattern, but this takes out the high here. That negates it. That means you're starting to look for more upside. You get a micro pullback, which is inside bars. Notice no close of a candle below this green candle, and then what happens? The market starts to rally, and then what did we just call here? We said this is a lot of resistance right here. Notice the candle pullback. You got a nice little tail formation here on this candle right into this resistance line. So again, this is just showing how you putting the pieces of the puzzle together, and it works. This stuff works, all right? Maybe it's not 100%, but there's nothing out there that is. But the point being is that it's you're putting the odds in your favor in a magnificent manner, maybe 85 to 90% success rate by understanding our rules and abiding by them, obviously always maintaining stops. Now, let's go to the 60-minute chart, but folks, I just want to talk about some levels. On the upside, your major resistance on this spider for the rest of the day will be 85.80 to 85.90. That'll be a lot of resistance right in that area if we were to push up a little more. Now, we really tagged it already, so you're pulling off that level. Should we retest it? There should still be good resistance there. We'll have to watch very, very closely. Okay? In addition, should we pull back a little more, then you're going to look for a little minor support here at 85.50. And then ultimately, this level right here, you got the moving averages, this green trend line, and this pink trend line all around 85.20. That's going to be a lot of good support there, folks. If we do come back in that level, it should be a very, very nice level to watch, all right? So we'll continue to watch for that and see what we can come forth with it, but nonetheless, something very close to watch. In addition, if that were to break lower, you're looking at 84.75, and then ultimately the lows of the day right down here at 84.60 would be good support. So those are the levels you want to watch, folks. I'm going to go to the 60-minute chart so we make sure to get our analysis in here as well, and we'll focus on that. Okay, here's your 60-minute chart. So you can see, folks, we had that nice move up over the last couple weeks. Then we had a minor pullback in the early part of last week with that monster move up. And you can see here beautifully. You see how this kind of curves up? And then look at the same pattern again, curving up. That's telling you right here will be a lot of resistance. That's that 85.80-ish to 85.90 level. All right, will be resistance. So you're really right into that resistance at the high of this candle, as we were just talking about it a little while ago, and possibly looking for a little bit of a pullback. In addition, the other level on your 60-minute that I'm seeing right here is going to be this. You can see how you had this pivot point with a move up and then the pullback. That pivot right here at around 85 should be good resistance on your 60-minute. After that, I'd really start to look at this level here, the lows of today, which I mentioned on the 10-minute chart. That'll still be intact to watch as well. That's at 84.50. And then really, if you go back even further, you're going to have gap window resistance right here at 84.25. Once you get below that, then there's a small chance of obviously gap fill, but you have to watch these moving averages. Now, I don't really go over those moving averages that much because they're going to constantly change price as they slide up underneath the market, or if the market's below, then they slide down. So you just want to monitor the 20 and the 50 as they will be good support on the 60-minute. Notice how you haven't hit the 60-minute 20 moving average in quite some time. That is telling you that it will be good support. Same with the 50. The 50 is right back here multiple days ago when they both were tagged. The 200 hasn't been tagged in a really long time, and it'll be interesting to see if we ultimately do come down this week or next week and tag that. If I had to put my eggs in the basket, I would say we do, but that's another story for our premium subscribers to digest in tonight's video when I go over the hardcore analysis on the daily charts, on the weekly charts, intraday charts as well. So keep an eye on that, folks. All right? So again, just a fantastic little bit of a move on the financials continuing today. Again, Goldman Sachs up over $5 right now, back to the highs, near the highs at 130. And watch that, folks, because this is going to be resistance. This high right here on Goldman will be resistance. Notice how you're coming right up into it currently. Anywhere between here and right up here will be good resistance on Goldman. You're just about there now as well. Dow's still down about 46 points. S&P back to the negative side, down a point, and NASDAQ down 8. One more time, folks, come and join the Research Center. It comes with the daily market report with hardcore analysis, videos which are 25 to 30 minutes nightly put up on research and analysis and guidance and education. We have educational videos in there. We got Pro Trader watch list and other magnificent things, all for a tiny, tiny $49.99 a month. In addition, the chat room's always fun, but you got to be more so someone who can dedicate a little intraday time to the chat room for it to be worth its while. All right, talk to you soon, folks. Have a wonderful day. Good luck. We'll talk to you tomorrow. Take care.